In fact, what I think is going to happen is we're going to do something we've never done before in history. We are going to make history and test up towards a major even level like $200,000 for Bitcoin, which is going to make Bitcoin in this case a multi-trillion-dollar asset.
Hello guys and welcome back to the channel. Today I'm really excited to be discussing trading tips and also common mistakes to avoid. And joining me I've got Nicholas Merton, crypto analyst and founder of DataDash, one of the biggest crypto YouTube channels. Nicholas, thanks so much for joining me today.
Jessica, it's great to be back with you. Thank you very much.
No, it's an absolute pleasure, and I'm sure our viewers are really kind of eyes on the prize at the moment. A lot of people are looking at crypto markets, and it can be quite daunting when you've decided that initial move to make an investment. Maybe you're looking for a nice entry point, and I'd love for you just to break down maybe some insights in your years of experience in this industry, some indications for a nice entry point, maybe on the chart for Bitcoin, for example.
Absolutely. Yeah. So I'm happy to dive through the charts here, maybe talk a little bit here about what's most important to watch for in the markets. So just to make sure I got the question, Jessica, you were wanting to look over like a good entry point for Bitcoin?
Yes, exactly. Because I think we're seeing that prices are so high right now that I think people might just be sitting on the edge. Their money might be on an exchange or a platform, and they're just looking for that final nudge just to get involved.
Absolutely. Yeah. So in regards to taking a look at Bitcoin's chart here, the thing about Bitcoin, what's really good to remember long term as an asset. Actually, let me get one more chart. But I apologize, Jessica, just for that question. I'll get this one up here. So basically here for the this chart right here is the logarithmic growth curve chart for Bitcoin. It's usually not the one that most people are going to see because they're either A, watching the shorter term time frames, or B, they're looking at the standard chart, which showcases price in a much more kind of parabolic or exponential fashion. So what we get to see here is an actual chart of the actual periods of substantial growth for Bitcoin, where there's actual major leaps and bounds in valuation on a percentage basis rather than just on a per se numeric value, which can again lead to these very difficult, hard to analyze patterns in price as you get towards the much more higher valuations as you increase digits on a specific value. But what we can see here long term is that even though Bitcoin goes through these very euphoric cycles and also has very stark corrections that scare off a lot of people, in fact, in the long term, Bitcoin sets higher highs and higher lows with each and every cycle, meaning that long term, with the crazy rallies and also the brutal corrections, you're always still making general returns on an annual or 3 to 5 year basis in this case. And usually you're making really great returns compared to any other market out there in the traditional finance space. As someone like myself, I've traded in traditional equities, Forex, commodities. I know, for example, Jessica, you have some experience in traditional markets as well. Like the thing here that's very clear is that even with the increased volatility or the fluctuations in price, where you can see Bitcoin move 3, 5, 10% in a single day, at the same time, in the long term, you're actually getting much better risk-adjusted returns than you would in other traditional markets. So it's very, very interesting, and especially considering that Bitcoin really only started trading back in July of 2010 and has been able to leapfrog from a couple cents per coin all the way up to $57,664 with an all-time high peak of around 58,000.
And I think what's so interesting about this as well is people, even we saw Morgan Stanley speak out this week and say that Bitcoin is viewed as a highly volatile or highly speculative asset when it comes to just being so high risk. But if we look at a cost dollar averaging investment, Bitcoin, for example, you've mentioned there, actually we are seeing quite consistent growth. You are mentioning higher highs and lower lows, but in general, if you look at it in the longer term, it looks like quite a smooth, consistent uptrend.
Absolutely. And you brought up a very good point, Jessica. Dollar cost averaging is alongside an asset like Bitcoin, which has had leaps and bounds in valuation, is probably one of the strongest approaches you can take to investing for risk mitigated returns. Because what happens with dollar cost averaging, and you hit on it very well and stuff about how it can start to de-risk any exposure, is that over time with dollar cost averaging, you're slowly entering in to positions along the way as you're going down and also as you're going up in the market. So what you inevitably actually get here is you're averaging in and out of the market, in this case at different valuations, is you actually get a very nice risk-adjusted return here for Bitcoin, where you get a really nice kind of smooth layer of performance over time, capitalizing the vast majority of the gains of Bitcoin. And sometimes finding yourself, especially if you have it where you dollar cost average in a really intelligent way, for example, when there's severe corrections in the market. So when we're in bear markets, when Bitcoin appears the least attractive to most investors, it's actually the best point to average in heavy. So when you can stack up a lot of cash or capital to buy into Bitcoin more heavily towards those discounts, you will outpace the market heavily. Those usually the best times in that case to average in usually range around 60 to 80% down in valuation. So that's when, again, you should start getting as exuberant as possible on building positions, because you're really holding it out for the long term for most people. At least that's the winning strategy, rather than trying to day trade or trying to actively swing trade the market 24/7.
Yeah, and you made that really good point there when it comes to corrections, and also it helps mitigate some risk as well if you are looking at this as more of a longer term investment than a short term trader approach. Is there any other ways our viewers can, if they are looking to get involved, mitigate some risks as a beginner trader?
Absolutely. So one thing, I know that this isn't probably a common answer, is everyone would say that when you're going about trading, in order to mitigate risk in this case, you have to use all the traditional tools. You have to use stop losses, which basically will trigger a sell order on your position if it goes to a certain price range. They'll tell you to use a variety of indicators, do X, Y, and Z. I have to say here, guys, the best thing you can do is look at longer term time frames. And as we talked about, as you mentioned, Jessica, and stuff about dollar cost averaging, long-term swing trading, those are your best bets in the market. Taking a much more longer-term approach and not letting yourself get stopped out. Because with the volatility and the increased volatility in the short term of Bitcoin and other crypto assets, stops can actually cause a lot of risk for people. And in this market, especially where the majority of the returns are made when you have a long-term mindset and aren't chasing one investment to another in the short term, having that long-term mindset is not only key, but also not falling into the same traps that a lot of people do are going to be it's very important to kind of get that right from the beginning, to make sure you don't fall into those positions that seem like they're things that can mitigate risk, but actually will in many cases knock you out of your positions. So that's very important here. But on the point here as well of kind of talking about, how to actually go about analyzing the market here and how to mitigate risk. There's a lot of interesting patterns that you can look for in regards to cryptocurrency markets that can help you. And they're actually ones that a lot of people don't look at because, again, they're looking at those shorter term timeframes. So I want to talk about a kind of philosophy here that I like to follow by. I follow a trading strategy called naked trading. And no worries, as you can see, I'm still wearing my clothes. So no need to take off your clothes for this one. But it's like basically for naked trading in this case, you don't use a lot of indicators. In fact, what you're doing is simply analyzing price. So when we take a look here, this is a trading pair here for Uniswap, which is a major decentralized finance altcoin in the cryptocurrency space, another cryptocurrency, paired with Bitcoin. So you can see here that as it goes up over time, this is Uniswap, or the Uniswap token, outpacing Bitcoin. And what we can see here is that there was a long period of time from back here in October all the way here to January of 2021, where Uniswap to Bitcoin remained relatively neutral, or went in what's known as a channel or a base here in price. And there's an old kind of saying here within traditional financial markets, and it also applies here in crypto, that the longer the base, the higher the chase, right? And overall, what we can see here is that as we sat sideways here for a multitude of months, finally, when we broke above that point of resistance, as it's commonly referred to as, and we established 2 points of critical support here at the same price range, we had a breakout here. This signals that buyers are coming in at a consistent point, are starting to pay higher prices, and are now willing to pay a higher price than this previous point of resistance, giving room for price to soar higher. And from this point on, we had more than a doubling to Bitcoin, right? So this is very important. If you want to go about outpacing Bitcoin or outpacing the market, you really have to know how to look at these types of patterns. Again, another example of this is OmiseGO, or OMG token to Bitcoin. We saw the exact same thing here. And what I'll actually do, just to make sure you guys can see the chart a little bit better, I'll go ahead and take it here to the weekly. We had multiple months going all the way back from August of 2019 here to May of 2020, where we finally broke out here. And not only did we have a breakout, which alone would have been a great trade here, it already more than doubled in this case in value, roughly speaking. But outside of that as well, what we did is we came down and made a new support level on that previous resistance, letting OmiseGO in this case leapfrog over 6x here from its valuation down here at the bottom. So again, these are the types of patterns we want to look for, and getting to know how we can not only set up these technical patterns where we can wait for these setups and set proper alerts, but also build the positions and just simply ride the wave here. That's the biggest thing here, is trading off of momentum. I can give a few more examples to this here. There's another one here like Cardano, which has been a big play this year. It had a long-term base here from July of 2019 here to May of 2020. And not only did we have a first wave breakout here, but as we pulled back, we actually came back on to this previous level of resistance, made a double bottom of support, and then continued on to do a 6x against Bitcoin in valuation. So there's a lot of plays like this in the crypto space. And I really recommend people look at this, especially if you're looking at those longer term timeframes. This is where the multiples and the returns come, and you don't have to do a lot of work. The last thing that I want to talk about here in regards to this kind of example about the longer the base, the higher the chase, that famous quote was really demonstrated here for Tesla. So we can see here for Tesla stock here, we had this long-term channel here where the highs were getting slightly higher and the lows were getting slightly higher in price. And this is a very long time from here in July of 2010 here to April of 2013. And then after that, we get a seismic breakout in price all the way from $8 all the way up towards around $50. And then we had the same exact thing with descending highs and descending lows with an eventual breakout from $73 all the way up to nearly $900. So this happens in both traditional markets and in cryptocurrency markets. And it's very important to just look at these long-term patterns because they signal what the market is trying to tell us. They're telling us here that now buyers are pressing price up higher. They're no longer settling for the lower lows here. They're paying a premium on the price of Tesla stock. And the same goes here for ADA, for OmiseGO, and Uni here, all these different cryptocurrencies against Bitcoin.
Really interesting. And if you could go back to the ADA chart for just a second, because I think the next point is also, as a new entry point or a new trader, also knowing the correct time to either take some profits or sell some of your portfolio. And if I'm looking at the Cardano chart now, for example, when you saw the most recent breakout after the price had leveled out before this 6x return, that might have been a point where me as a new trader might have sold and I might have missed that 6x return. How do you identify properly when's the correct time to take profit, and how do you make that decision?
Yes, that's actually a very good point, Jessica. It's one of the things I wanted to dive into here. Unfortunately, the Cardano chart here is not very favorable with the certain methods that I would usually use. I will say there's some very key giveaways here where, for example, if you look at this chart here, what's different about this candle here? And for those who don't know how to read candle charts, this is basically the way to read this is if you have a green candle where you have the bar starting here and the bar ending here, and then you have this long tail on the top and bottom known as the wicks. This showcases the price range, the total price range. The wicks are the kind of range for where price traded that day. And if it's a green candle, this is the open and this is the close. If it's a red candle, you start from the top to the bottom of where it started at the day and where it closed at the end of the day. The difference with this candle against pretty much all of these other candles is the really long wicks here. And it's not a matter of timing the absolute top of the market, but this shows us here that the candle was quite exhausted. Most of the gains of that day were sold off. And then the next day here, we sat sideways. And then worse off the next day, we had a red candle here. So the more you see this kind of pattern here, in regards to what's known as just generally candle patterns, this is something you want to be concerned about for sure. Now, there's other things as well to be concerned about. For example, there's another way we can still use our principle of naked trading where we're just looking at support and resistance or price highs and lows. And a great example of this is in Bitcoin right now. And I'm going to dive through history here. There's a few examples of this. So we've been going through a bull market here for Bitcoin. And take a look here, right? We set in a significant higher high here, a higher low, significant higher high, and a higher low, and another significant high. But I want to ask real quick, what's the difference between these two significant highs and these two significant highs? The biggest difference here is the range of price gains here for these highs from the other one, right? So you can see these ones are very close together. Bulls are not pushing up the price. So the buyers in this case are not pushing it up as high as they were from this high to this high. And this starts to showcase almost a rolling top here where valuations are starting to get a little bit heavy here, right? We're starting to see that things are starting to fold over. The momentum is starting to die off here. And we now need to see whether or not the lows are going to be able to hold. If we break down below this general line of support here, that could spell really bad news for Bitcoin here in the short term. Now, there's also a few other times this has happened in the past We can see back here from June, the end of 2018 in December to here in June of 2019, we can see Bitcoin's price went from around $3,200 to 13,000, nearing 14,000. And then after our first correction here, we came up and set in a second higher low. This is another pattern of what we want to look for here. If we get these opportunities where Bitcoin rebounds after a pretty significant little pullback here, back towards those relative highs, and it starts to fade back again, this is a sign here to take profits and cash in on most of the gains from the cycle. Again, not trying to pick the top. And let's take a look at one more example here for Bitcoin, where both of those principles we talked about come into play here. If we take a look at the standard chart like we're doing here, or the logarithmic chart that focuses on percentage gains, we can see a few things playing out here. First off, you can generally see here that price action started to turn parabolic, right? We can start to see that the momentum really squeezed in here in the last few months as the bull market picked up. And if we dive into the shorter term time frame here, we can see that those highs were getting tighter and tighter. They weren't as divergent as they were before every short-term correction. You can see here to here was a good divergence, here to here was a good divergence, but here, here, and here, these are very, very close to one another. And then we set in our significant lower high, signaling that the market was fading, that it was time for a bear market. And as we can see after that, Bitcoin started to dramatically decline, going all the way down to $3,000. So again, sorry for the rambling there, but that's how I generally kind of view markets overall, Jessica. And I know, from your experience in traditional markets, it's really about analyzing the broader cycles and the momentum.
Absolutely. And fascinating there. And I have to ask you now, and I think this is coming, is are you expecting now that we might be running out of momentum with Bitcoin based on the charts you've just showed us? And if there is a supported level, if it remains above the support level, what kind of highs or lows are you expecting in the next few months? Is it anyone's gain here, or do you have an idea based on your technical view?
That's a very good point, Jessica. So there's a lot of people who think that markets, they either get caught in the euphoria and they think they're always going to go up, or they think that they're going to crash by tomorrow. Most traders will talk in that fashion because in most situations, people are caught up in their biases. In this case, I want to try to win the market. I want to make sure that I understand what historically Bitcoin has been able to do, and also understand a few other elements, the macro environment we're in right now, how things are very different than they were in the last cycle in 2017. Well, what's really important is that in analyzing long-term timeframes, we can see that we're getting very, very close to this long-term line of resistance that's weighed down Bitcoin's price, or basically established when the highs are set in for Bitcoin. And this is, again, looking at that logarithmic chart that we talked about before. However, we are getting very, very close to it. In fact, we're getting close to a big even price level. And this is another principle sometime to consider for testing market tops or potentially being a sell signal, is that when we approach very large, big even numbers like 70K or 80K or 100K, those are periods of time where psychologically people are more inclined to sell their positions and also more inclined to buy when there's a correction. So as we get close here to 70,000, I think there's a very good chance that we are going to slow down after multiple months of green price action and actually get a substantial correction, because we really haven't had that since back here in October of 2020. However, a lot of people would say that if we're going to get a correction at this point, it's going to be that we step into what's known as a bear market, which is a long drawn out set of corrections here that usually lead towards about an 80% pullback in Bitcoin's price, historically speaking. I don't think that's going to happen. In fact, what I think is going to happen is we're going to do something we've never done before in history. And that is going to be not only a kind of a sideways correction here, if you will, where Bitcoin's valuation will drop to 50, 40K, pulling back on some of these gains and sitting sideways for some time like we did here in 2019. But outside of that, we're going to break out higher and break above this logarithmic line of resistance. We are going to make history and test up towards a major even level like $200,000 for Bitcoin, which is going to make Bitcoin, in this case, a multi-trillion-dollar asset rather than the trillion-dollar asset that it already is. So I'm very, very excited about the potential for this as Bitcoin is growing and emerging as a store of value. But this goes, bear in mind, well into November of 2022. So we're talking about more than a year from where we are now. In fact, about a year and a half here in time before we're going to set in that all-time high. And here's the good news here. A lot of people will get discouraged now because we're going through a bit of a pullback. But I would say I would digress on that point, because at the end of the day, if we're averaging in here for dollar cost averaging and you're getting in anywhere from 70 to 50K and we ride to 200K, that's still going to probably outpace any kind of investment you can make in the stock market, in commodities, unless you're buying maybe individual stocks or companies and you really are able to win over the market. If you're buying any index fund like this, the S&P 500 or the NASDAQ, there's no way you're going to get those kind of returns in that period of time. So it's, again, still showcasing how Bitcoin is such an interesting investment in the long run.
Amazing. Thank you so much. And I'm sure that our viewers have learned so much when it comes to cost dollar averaging, not putting in more than you can afford, but also having it more as a long-term race than a short-term sprint, to really protect your portfolio there. So I'm sure our viewers have so much to take away. You've definitely given me a lot to think about as well. Nicholas, thanks so much for your time today. I'm really thrilled by this interview.
Jessica, thanks so much for taking the time. It's always a pleasure.
Thank you so much. Well, that's all from myself and Nicholas. I want to hear if you agree with his future price predictions, and if you have something different, share them in the comments below. And as always, please support this channel by subscribing, and see you all again very soon.